Hello to everyone. Today I am going to present Product Management and Analysis Part 3 on my channel, Financial Reality. If you are interested to have more videos on banking and finance related topics, please do subscribe my channel. Now here we are going to discuss credit management overview. We will define credit management, thereafter discuss credit process, thereafter, qualitative analysis and types of the qualitative analysis. Credit management is the process which includes the series of processes for credit evaluation purpose. The credit management's most important evaluation tool for a banker is know your customer. Credit management is not a table tie suit job, it's purely a field job. You should be familiar about all type of the information related to your customer, particularly customers' business history and other types of activities history, and secondly about the source of funds the customer is going to generate or involve in the generation of those funds. To have the knowledge about the customer, the following initial tools can be used by the banker for business oblique customer evaluation. First of all, business history, and secondly, reference verification. Credit process involves the analysis of all events that can directly or indirectly impact credit relationship between the banker and the customer. The evaluation process includes qualitative and quantitative assessment with the primary objective to add quality asset as a part of banker's portfolio. Quality asset means having the minimum probability of the default. Qualitative analysis include the economic, environmental, operational, managerial, and other non-numeric factors. It's basically judgmental analysis, but with the logically supportive evidence basis. Quantitative analysis include usually referred as financial analysis based on past current performance of the business. Qualitative analysis together with the quantitative analysis of a company's financial position are used by the credit officer to identify a potential customer's willingness and ability to serve the debt. It is very important. The willingness of the customer is one of the most important evaluation tools. Qualitative analysis become more important, particularly after math of the recent financial crisis. We have recent financial crisis was of 2007-2008. Thereafter, we have recently faced the COVID that also having heavy impact on the financial issues. Analysis based on judgments about the customer, and it focuses more on the willingness, integrity, and standing than other factors, because if the customer having the ability to meet the financial obligation with the willingness, the banker will never lose such a customer. Qualitative analysis of borrower's management quality is one of the most important factors in a credit decision. Credit decision must be based on the rigorous investigation, thorough analysis of business character, principle, capacity, moral standing of a company's management that can be judged from its credit history and secondly from market intelligence. Qualitative analysis, external analysis. The qualitative analysis focus on the external economic environment that include economic and the political factors, inflation, GDP growth of the business sector in which you are dealing, interest rate, the change in the interest rate frequency by the central bank, exchange rate, devaluation of your currency with the external currency, trade deficit, thereafter balance of payments, degree of tariffs, the tariffs imposed in the shape of custom duties and the taxes, size and the generation of the foreign exchange reserve of the country, critical stability, law and order situation and energy crisis. These are very important factors, particularly in case of our developing countries. The external analysis also focus on the demand dynamics of the market that include dynamic of the market. Target market is closely related to the strategic planning that involve the determine the size of the potential market. Segmenting according to the important characteristics, weighting the business opportunities, selecting risk asset or for product acceptance criteria, and defining a market. So you should be familiar with the size of the market and the possible consumption of the product within the market. The internal issues of the firm are related to the operations and management, the combination of company's operation and management with respect to the external and the internal factor. The customer is to be positioned either as a leader, average player, below average player, or bad player based on size, sale level, profit, profit, and other financial indicators. So it is very important to evaluate the position of the customer within the market. Management integrity and payment behavior can be checked through the reference verification. It is very important to evaluate customer performance under different circumstances in the economic boom, normal situation, and during the crisis. Management depth and skills also one of the important factors to be evaluated. Management depth means either they have a proper hierarchy system and the people are skilled. If the owners are themselves are not skilled, either they have properly hired the skilled employees or not. See you very soon with the upcoming video on credit management and analysis. Thank you very much.